Hello, everyone. I'm Rob Smith of the Smiths in the Black channel here at Ticker Talker. And if it's 12:30, it's the Strat Time Report. What's the Strat? Well, we just introduced the Strat to Ticker Talker. So if you're new to this, you're going to love it because nothing takes us by surprise. And you're going to get me here every day at this time to fill you in. So what's going on here? We got a nice little puke fest going on. So here's what's going on. So if you look at the SPY, and you're going to see all this kind of stuff, and we have some stuff that we've been watching over here in the lower right. But basically, we got the S&P SPY coming in. And so what that means is we want to look at, you always want to look at multiple time frame analysis, right? You want to look at 4 time frames at least, whether you be day trading, whether you are swing trading, whatever you're doing. So if we take a look at this, you're going to see the S&P spider over here, upper left. So what had happened was that in the last few days, at least in the SPY, we had this higher high, then a slight lower low, and now boom, big wipeout gap down coming back through an old previous range. That's stuff that we like. So one of the things that we know to be true is that there are 3 things that can happen from one bar to the next, right? You can stay inside, you can take out one side, or you can go outside. So this is our concern here. The upper middle, you can see this. We took out the highs and then come back through the range. Right? Since we know outside bars exist, until we have a reversal, at least on the daily in the left here, we're going to go take out last week's lows right here. That's 303.06, okay? Unless we have a reversal, which we are nowhere near doing on the daily, okay? So if we go to the Qs, we know QQQ's been a lot stronger, right, than the other broader averages. And so you look at this and you go to the upper left, you see this daily, new high, then take out the lows. This is a reversal. We call that a 2-2. A 2 means that you took out a previous high or low, and then you did it again the opposite way. This is a 2 to the upside. So what I mean by that is that an inside bar we call a 1, right? Taking out one side of a previous range, we call a 2. And an outside bar, we call a 3. And that we know that that exists, so we can expect that to happen. So what I mean by that is this was a continuation, and this is a reversal here. And so if you take these 2 days here in the upper left, they're now an outside bar of that, right? Okay, so a little bit stronger, just coming into the weekly opening as the QQQs, but SPY, like I said, go back to here and you see this. We can expect this to be an outside bar to continue. Now, it might not happen today, maybe it'll happen tomorrow, or it could happen next week and be what we call compound, right? And what I mean by compound is it would have been an outside bar, we just ran out of time, right? But unless this daily over here reverses by taking out today's high tomorrow, right? That would have to happen, or you'd have to have an inside day. Right? That's not happening right now, just so you know. So you can have short term if we go down here. You're going to go down to the 60. Okay, so we just started a new 60-minute period, and so we call that the flip. Why? Because when you have a 60-minute period, right, what you're going to see is more algorithmic trading turns on and turns off. And what I mean by that is that you have to tell a computer program what to do. You have to tell it to buy or sell. You have to tell when to do it and how to do it by taking the offer or hitting the bid. So you'll notice right here at the bottom of the hour, guess what turned off? The sells. Look at that. It opened right on the low and starts moving up. Now, if this thing turns red, then it's on. It's go time, puking again. Right now, it would open as an inside 60 to open. How are you going to get outside of this bar? If you're going to reverse, it would close inside here and not take this range out. And then an hour from now, take this high out. All right. So we got some time on that, but that's what would happen. But you can notice this if you watch the flip, the bottom of the hour. Are the computers still on to sell, or are they covering, or are they buying? And you'll notice this right here. Open as soon as that bottom of the hour open there. So we got some nice puking going on, but like I said, now we're gonna have an inside 60. So if this stays inside, right? Which is highly likely. I'm going to say highly likely that you're not taking this out in the next hour, right? Maybe you do, maybe you don't. And if you're going to do it, you're going to start off like this with a 15, right? But if you start taking out this opening, then all hell breaks loose again, right? Watch that, because that means that the computer's either being overpowered or the reversing back down, right? So you want to know about that. If you're trading the futures and stuff like that, that's something you want to know about. QQQ here, right? The same thing. And so what you're going to notice is that now that you have the S&P spider down almost 4%, is that the futures are going to take over, right? There's going to be some anomalies, and that's what we'll look for, stocks that are strong during this. But for the most part, almost everything is going to look like the futures. And that's what goes back to when we go to like the monthly. If you go back to the monthly, when, you know, pandemic and everything hits in here and you have this kind of action, almost all the charts look the same. And the reason is because when you have that kind of action, that natural buyers and sellers are stepping back. The futures is going to drive everything. If I've got a buy order, I'm not going to buy when it's doing this, right? This massive jump. I'm going to let things mellow out, or, you know, nibble a little bit here and there. But for the most part, everything's going to look like the future. So on a day like today, it's looking similar. So what you're going to see here, if you pull up a lot of charts, is things going to be looking like this. Starting off, at least early on, to be look inside 15s, inside 30s, and inside 60s, right? And so in the next hour, if you can take whatever the high close of this is, that would be a 2-1-2 reversal. 2 is down. Remember, one side taking that out, and we'll be addressing this at Ticker Talker. If you're new to this, get to know it, because this is how things work. Taking out one side and then consolidating, and then either continuation downside or reversal back up. All right, that's what you're going to see. So what we did have is some of the pandemic names trying to stay firm. ZM. All right, and ZM. So here, you always want to look at 4 time frames. Always. All right. So when people are looking at little daily charts and thinking, I think the things, you have to look at 4 time periods, because you want to identify participation groups by price and time. That's what you're doing. You're not reading charts. You're analyzing data. There's a big difference, right? When you see guys think, I think it's a wedge or a bull flag, I don't know, I have to go on Twitter and have a vote. No. People are, and machines are actively buying or selling, and they're doing that by price and time. And that's what you want to identify. So if you look at ZM, you're going to see this bar was completely inside of this on the monthly, lower middle. This is an inside bar, taking it to the upside. Is that a good thing? It is. If you look at the weekly in the middle upper, you're going to see it's bright green. If you look at the daily, you'll notice right in here was your inside bar day. Here. We knew about that yesterday. Did we? We did. Took it up. Now it's trying to continue. Okay. So now if you go down to the 60, you're going to see this. You're going to see the initial push off this here, right? And now 3 hours stuck inside of here, right? So sometimes you got to be patient, let things set up, right? And so in an hour, I'm sorry, at the bottom of the next hour, if this thing, like the SPY and everything stays inside, right? What you want, some people will say, I want to try and buy the most oversold for the biggest bounce. Wrong answer. You want to trade against the people that are jammed in wrong positions, all right? And those are the people that are short stuff that's up on the day, all right? Because when you try and buy the bounce or whatever, maybe you make a little bit. The problem is that you are buying something where people are already losing position. So when it pops up, they're looking to sell too, right? And so you got to be quick on that. These are the guys who are just getting jammed, right? These guys are just getting jammed. So we'll watch this on the 60 and see how that goes. Tesla, and Tesla on the day, just an inside day, right? But you'll see this also in the lower middle, the inside day to the upside. So all this kind of stuff, we want to look at how it Cree. I'm already running out of time here because, like I said, right, normally during this period, the strat time report, I'm talking about stocks. These guys are strong. These guys are weak. Today, futures driving the price action. All right. So Cree trying to take this gap down. I was just picked up on that. No such thing there. We go to NK. How you doing, buddy? All right. Because here's one of the things you want to do. Hopefully, that if you're a professional trader, you got good scans, right, to look for what you want to find, right? And so in this thing, what I'm going to look for over here is a search for anybody over yesterday's highs. Why? Because we want to trade against people in losing positions. Who's losing? If I'm short something and the market's down 4% and my stock is above yesterday's highs, I'm screwed, right? And I want to meet you because my name's Rob, right? And I know you're screwed, right? And you're going to see the likes of ZM, Grubhub, all this kind of stuff. And then this tells me how much it's up or down from the opening, right? Ooh, serve. Let's take a look at serve, right? SERV. Okay, getting served. We call this a rev strat. If you go upper left, the inside bar, that's an equilibrium. They attempted to take it out, stopped all these guys out. And then today, boom, to the upside. So in the next hour, if you go to the lower left, you're going to see this. The two up, the two down. And if we can take this out in the next hour, 35.86, that's where you stick it to them, right? These guys are jammed. Anybody short something like this is jammed hard. So if we go to watching these futures now, and so let's go back to the futures. I'm telling you that the futures are driving the action right now. So we go to SPY here. Once again, now there's that 60 shrinking. Let's change that to a 5 minute. Now you see this, it goes up on the 5 minute, then goes inside and then down. That's a 2-1-2 reversal back to the downside. That's something you'd want to know about. So when you know what to look for, right, you can shrink your time frame down and say, okay, the low of this is 305.94, right? 305.94. I'm already in. So if this thing comes anywhere near coming back up, I can cover part of it and just leave my stop there. If this starts to tank, I'm already in and I've made something. The key of trading the strat, what we do is you make a little or a lot. If we're wrong, we get out immediately. But if you're right, you can stay in, you make a little or a lot. If this thing goes red and starts taking this out, we can look to add to that position, all right? Because we've already got a winning position on, all right? On the 15 would still be inside, right? So here, when I finish in like 3 minutes, now you'd have an inside bar here for either the reversal back up or the continuation down, right? And this happens all day long. You're going to see it here, continue down, boom, boom, boom. Let's go back to that 5 minute. Okay. So like I said, it might not be a huge winner, but if this thing comes anywhere near where we got in, take half off and stop the rest, right? And then we'll see if that goes down because we know that we're forming this 15-minute stuff. Because I wanted to get into a bunch of stocks, but like I said, it's all about the futures right now. You got VMW for one, we've been talking about all week. And look at this VMW. You see this upper middle. This is a 2-1-2 reversal inside week to the downside. Have we known about that all week? We have. And that's below 146.88. And then not only can you do that, but you can time it once again to the 5 minute. Did I tell you everything's about to look like the futures? I did. Is it? Yes. Inside 5 minute, down here, lower left below 139.35, right? So you can look to add to that position. If it comes anywhere near it, cut half and stop the rest. And then let the magic of the market do what it's going to do. So right now, looking at this Dow Jones Diamonds, you'll see this whole thing looking exactly alike. Inside down off the 5 minute here on the lower left in the Dow Jones Diamonds. It's not that hard, folks. Once you know what to look for, it's really not that hard. And I'm going to be here every day here at 12:30 at Ticker Talker TV with the Strat Time Report. Thanks for coming. See you tomorrow. I'm Rob Smith of the Smith in the Black channel here at Ticker Talker with the Strat Time Report.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.